Hey, for you guys that are on Facebook, I just wanted to make a quick video to show you the strategy that I use to trade the Forex market. If you have a second, I'll break it down to you. Change it over to this screen. All right, now I want to start showing you pretty much the trades that I make. So let me go back to that screen for a second. My whole goal is to buy low and sell high. That sounds so simple, but a lot of people miss it. For example, where you see the white dots are at, let's use that for an example. So what I would do is I would buy, like let's say if you buy and you sell right here, and as the market goes up, whatever position that you're losing in, that's the one that I would add to. Because you pretty much, what you really want to do, especially somebody with limited income that doesn't have a lot of money to invest, what you really want to do is you want to scatter your seed in the market. Just scatter, portion out your trades in such a way to where if you're wrong, you're still able to manage risk and still stay in the game. See, I have a long-term and a short-term strategy. Let's use this for an example. I said buy low and I said sell high. So right here, the current prices. This is an account where I'm going long on a GBP USD. The current price is 1.3288. So I would buy it here. Well, I just put in this position. I just put in this trade. But all these trades I put in, right? I was putting in these trades. The market was still dropping. I kept putting in trades. And I kept buying. And now it finally looks like, the market is starting to bounce back. The market is starting to go up. Okay, let me go to the other account. This is the account where I'm shorting it at. So as you can see, I scattered the trades on this one as well. And the last trade I did is close to I bought it and sold it close to around the same price. Close to that, that 1.3289 is a price where I bought it and sold it. But the positions are different. So my main strategy when I'm trading, I'm not really looking at pips. I'm looking more at net asset value. And as you can see, I mean, from that right there will tell you that, I have a lot of experience in the market. And right now I'm at a place to where I'm actually trying to master what I'm doing versus just, just doing anything. So my main thing, what I would look at during a trade would be the net asset value. That's what matters most to me, is the net asset value. Not so much of the pip size or how many pips you're making or how many pips you're losing, but the net asset value. Because the net asset value, and also paying attention to the margin that's available, so that way you don't end up getting a margin call. So that's what's important to me. So what I'm looking at is I'm looking at the position size. So in this account, I'm trading with you will see the position size is 249. I'm shorting it total. This is the total position. All those trades are broken up a little bit here, a little bit there, but the total position is 249 units. So let's go to the other one so we can compare and contrast. and over here I have 449. So on one end, I'm buying more currency on this account than I'm buying on the other one. On the other account, I'm not really buying that much. I'm buying 249 right here. I'm buying 449. So what I'm doing skillfully is I'm trying to see which way the market is going, and as I see which way the market is going, then I add or decrease the trades. The whole game, the whole name of the game for me is basically to stay in the game. So as positions profit, let's say these trades right here were to go into profit, not all of them, but let's say 3 of the trades out of all these trades, 3 of them were to go into profit. What I would do is I would close out the 3 trades where I am gaining some profit at, and I would if I believe this is the account where I'm going long at, because I have the trade split up in 2 different accounts. If I believe that let's say the market is going up right now, but I believe it's about to turn around, and I have more in this account than I have the next. So if these 3 trades were to go into profit, then I would close out these trades. Then I would go and I would go to the next account, close out these trades, and go to the other account that I just showed you. Only close out the profitable trades. Then I would go to the other account like I just showed you before, and this is the account where I'm long at, and I would where I'm shorting it at. This is the account where I'm shorting it, and I would add to these positions. So it started out being 249 on one account, 449 on the other. Then what I would do, if the account where I had most of the where I had a bigger trade at was going into profit, but I thought the market was going to turn around, so out of that 249, let's say I dropped that 249, that 449 back to 249. So I even it out. You balance out the trade, but I wouldn't close any positions that are not positive though. Because the whole thing is to manage the risk. Manage what's in red. So I'm not looking to close any position that's in red. What I'm looking to do is increase the net asset value of my trading positions while I'm trading. So I have a long-term and a short-term goal. The reason I'm trading long-term is because I believe that, well, we know, anybody that, if you really study the charts, right here you can see, whatever goes up is going to eventually come down. I mean, that currency, that's like for you to say that the market is never going to come around, that's like you saying that people are just buying and they're never going to sell again. Nobody's ever going to sell something. I mean, that's not realistic. Every time there's a buyer, there has to be a seller. It has to be, it has to be evened out. So with that knowledge of me knowing that, that's why I keep the positions regardless of how long they are. Because, I mean, you can keep a position, right? As long as you can maintain that position, you can always catch up. Let's say if I have more on one side than I do the other, on the retracements alone, as this right here is a retracement, if I got more on the losing side than I have the winning side, and this is a retracement, the market's coming back, I would just drop what I got on that retract, on when it retracts, when it comes back, drop what I have right here, and make it up like that. So if you have, let's say you have 400 on one side, 800 on the losing side, you have more on the losing side than one side. What I would do is I would wait for that market to drop back, and then on the side that's actually going in positive, but I have less in, that will be the side that I add more to my position to balance it out, right? And let the market finish its course. And when the market finishes its course, that's when I would turn around, take out all the profits out of the winning account, and I would work on balancing or evening out the account that's losing money. So that's my whole strategy, is to basically, keep on taking profits out, as you're profiting, take the profits out, and then from there, you know, just manage your risk. Manage your risk. All right, I hope this helps somebody. I hope this bless somebody. God bless you. Have a great weekend.